Hello and welcome to Pro Trader Strategies Market Commentary for Tuesday, March the 24th. I'm Eric Wilkinson. I'm here to talk about the economic, geopolitical, and market analysis. And then layer on top of that some option strategies that we can implement into our portfolios to take advantage of those assumptions we come up with by digging into that economic, geopolitical, and therefore market analysis. But let's step on over to the economic data across the pond. Flash PMI numbers. Remember, these are the most important numbers that they look at across the pond. And they came in for the French flash services PMI 29, expected to be 39.6. Now remember, you guys, anything below 50 is contraction in the economy. Last month's reading was 52. So now we're starting to see some of these numbers come in that are related to the COVID-19 or CD19 or coronavirus, whatever you want to call it. So really seeing the impact there on the French flash PMI for the service sector. French manufacturing came in at 45.7, expected to be 40, so a little bit better than expected there. German services PMI coming in at 34, expected to be 43. They did revise last month's number down slightly from 53.3 to 52.5. So you can see the big difference here that we're seeing. This is a massive slowdown. We were starting to see Germany start to crawl out a little bit from some of those bad readings, but really the service sector falling on its face here with these service numbers. We got the rest of the European manufacturing sector PMI coming in at 44.8, better than the expected 40.1, so that's good. But the flash services PMI coming in at 28.4, falling on its face from expected to be 40. And remember, previous month's number was 52, so just a slash on the service side. Great Britain's manufacturing coming in at 48. That was better than the expected 45, and but you know, the previous number, we started seeing that number crawl out of negative territory at 51.7. So a big miss there. Big, drop down from previous indicators. They did beat on the estimations. And then the Great Britain's flash services PMI coming in at 35.7, expected to be 45. So again, the service sector really taking a hit with the coronavirus across the board there. Now here in the United States, we also got our flash manufacturing PMIs, but remember, we're really looking for the Institute for Supply Management, but that will give us a bit of an indication here. Manufacturing coming in at 49.2, that's expected to be 45, so it did start climbing up a little bit, but this was also before we saw the big the car manufacturers here in the United States basically say that they were going to halt production. So that number not really going to reflect all of it as well as we would like. But, they are going to look to make masks and ventilators and stuff like that, which is, like wartime stuff where they stop making butter and they start making guns and butter in economics. That's what we always talk about, guns and butters on the charts, right? So in good times you make butter, in war times you make guns. So anyway, flash services PMI, we got 39.1, expected to be 44.1, so a little bit lower than expected there. Manufacturing out of the Richmond Fed coming in at 2, expected to be a negative 10. So better than expected there, and last month's number, remember, was negative at -2, so much better on that front. And then new home sales, looks like people are starting to get out there and buying, at least before this coronavirus thing started going on. 765,000 units sold, and then expected to be 750,000, so a lot better than expected. And they revised last month's number up from 764 to 800,000. So nice beat on that one. We also have tentatively Trump speaking later on today. One thing to note, we had yesterday, I'll talk about that when we pull up the gold chart. We've got crude oil, kind of lumbering around here at 23.73. But let's look at gold. It's up $86 today. It was up over 100 points earlier this morning. And basically, we're talking about why is gold all of a sudden back in the limelight. We saw this move happening, and the sell-off with the strength in the dollar would cause some weakness maybe to this. But I think more so in this little area right here, we were getting more of a margin call kind of thing. Let me redraw that. We got more of a margin call right in there. And people saw this move down in equities, right? Well, what do you do with some of your better performing assets? Well, you probably sell those and try and start investing on dollar cost averaging on some of these stocks that we really like, or sector rotation where we think that those kind of stocks maybe add to our portfolio. So there was a lot of selling there, margins going up in gold also, strength in the dollar. All of those things were negative to the gold as a safe haven, right? Well, yesterday they announced unlimited quantitative easing, basically, and that is shooting us higher. The expectation is going to be you need a safe haven for the dollar or your currency if they are just going to print money like it's going out of style. And I was going to try and draw a bunch of dollar bills, but I'm not going to do that and take up all that time. But anyway, you can see the market really spiking off of that. Just a massive move today, 100 points. I don't even remember the last time I saw a 100-point move to the upside in gold. So that was just pretty amazing this morning. A lot of levers and pulleys going on there. Plus, that announcement of unlimited QE is an unknown, and you would expect that the dollar would start coming off. That would give gold strength. All right, on to the bonds. They're off by almost 3 points right now. A lot of this has to do with the moves into the equities, and they are being very selective on these moves. Look at the VIX here. I mean, the VIX shot down into the 30s this morning off the moves in equities. Now we're starting to see a VIX pop here. I think some people are looking to add protection in their portfolio on these moves. I did that little webinar not too long ago on, sell the rips, buy the dips. I'm still kind of under that mantra where we still need to be a little bit more protective of some of these stocks that we have in our portfolio. On the big moves to the upside, I think you need to look to sell or maybe sell some covered calls or something like that is what I'm looking to do for some of the stocks that I have in my portfolio. And I was doing that on the short call spread around the SPY in my video. All right, here we have the Dow Jones Industrial Average up 1,500 points on the day, 1,600 points, let's call it. Now, yesterday we talked about this. If we were to finish where we are right now, yesterday we got a doji that looks like this. And I said, if we get the confirmation candle where it is more or less like that, well, that is a good thing. That is an indication of a bullish move, all right? So maybe finding a bottom here, it doesn't necessarily mean we won't maybe roll over and come back down. But to me, if we were to finish right here, I would be very excited about upside in the equities going forward. So we're going to keep an eye on that. It doesn't mean we couldn't come up here to about this level, maybe even, and come up to about this level here and maybe take another retracement down. But at the end of the day, it looks like we're making a move to the upside here in equities. Doesn't mean that it's all done, but at this point, we've got a confirmation for a move, and I expect us to start making a move to the upside. All right, let's go over to the Nasdaq. Again, Nasdaq very similar. The chart's a little bit more fuzzy as to a bottom here. I think the Dow Jones is a much better indicator of that. But still, confirmation of a bounce. Got a lot of consolidation going on here with that volatility. That is, very typical of like a capitulation type moment. You can see the MACD going way to the downside on that, really showing that there was a lot of outflows. That's another indication of they're finding a bottom there is what we're looking at. E-mini S&Ps, MACD, you can see very similar. This chart pattern, very similar to what we saw over there in the Dow Jones Industrial Average. This setup right there is an indication that the market wants to move higher. So could be seeing more of a recovery in these equities going forward. We got the E-mini S&Ps up about 180 points. I mean, we're talking huge moves here to the upside in the equities. Now, what I was talking about in your portfolio, we're probably seeing a lot of things doing pretty good and some strange ones that have been doing well, and we expect to do well going forward, especially in the environment we're in with this flu pandemic going on. Was we've seen Walmart do well, some of these retailers like Kroger doing very well, because those guys are the grocers that are staying open. They're not ones being mandated to close due to the non-essential workforce. You know, like liquor stores are getting closed down, but these grocery stores are being able to stay open. So we've seen Kroger, Walmart do very well. Well, what's been lagging there? I've talked about stuff like MasterCard and Visa should be doing well in these types of environments. Netflix, those guys, Netflix was doing well before, but we're starting to see some kinks in the armor with some of those other ones. With MasterCard up $31 on the day, up 15%. You know, that was one of those ones that was dragging behind. As a matter of fact, yesterday, if you guys remember, or Friday, I put this stock at 142.5, which is obviously still below where my buy-in is a lot higher here. But yesterday, I went in and sold the 245 calls. Today, we get that big bounce in there. So I didn't cover all of the stock longs that I have on, but I did throw a couple of short calls against the longs that I do have. So making big moves there in MasterCard, whereas we could see something like EA Sports did make a big move today. It was up into the hundreds, about $10 higher than where we are right now. It started coming back off basically to reality, right back to the point of control. But a big move was happening with EA Sports. I think EA Sports is doing very well in this environment, and some people came in and really started buying early. But these are places where you know, there's going to be more of a sector rotation, maybe into more risky assets like, you know, the autos and stuff like that, where people wanted to take some profits on some of these other names that they knew were going to do well during this as well. Here's with Walmart, like we talked about. Walmart was doing very well going into this, holding on to it anyway, and probably more profit taking than anything, but that's to roll over into things like, you know, what we were talking about with the airlines. We can look at UAL, probably Boeing's probably doing very well today. Look at that, up almost 17.5% on the day. DAL we could look at. So the airlines, travel and industry, I don't know what Marriott's ticker symbol is, but they are probably doing well today. We could look at something like Starbucks, which would have been very hurt. These companies like that, maybe CMG. So $74 on CMG, over 10% on the day. Anyway, big moves happening. Sector rotation, to be honest. You know, the travel and entertainment, to me, might be a good time to kind of cut some losses there. If you're a little bit worried or looking to raise some capital for some other things, and maybe do some sector rotation of your own, where maybe get some out of some of these, different travel and entertainment type of stocks, because at the end of the day, I don't think that those guys are going to do very well going forward here with the travel and entertainment, because, you know, who's going to go on a cruise ship anytime soon? People talking about them getting the bailouts. Well, there's a lot of flack back and forth on that because they have kind of built their companies offshore where people aren't really seeing that. Tax income to the United States, so they might not get the bailout at the end of the day, unless they're going to use those as triage units, which is something that's been considered. All right, so at the end of the day, I haven't done anything else with my overall portfolio, just kind of sitting on it right now, watching and waiting. I've done my sector rotation. I might look to lighten up on a few things, but at this point, I got in a little bit early on the sector rotation, and so I'm going to kind of sit on it. But we're going to talk about it later on today in a webinar on picking stocks for this type of environment, how we're going to roll out of some of these other ones like the travel and entertainment that are up today nicely, and maybe roll into some things that are getting beat up like those Walmarts and some other stocks that will do well throughout this type of lockdown or the coronavirus. All right, so they might surprise to the upside, and that's the ones we want to take advantage of. All right, so if you can't take, oh wait, one other thing that we got to talk about is this disclaimer. Please take a moment to read over this. This basically says that we are an educational company. This is not advice. I'm not trying to tell you what stocks I think you should have in your portfolio. I'm trying to be thought-provoking and get you guys to think about your own portfolio and how you can be mechanical with that portfolio in order to increase your success rate going forward. Also, remember, past performance of any trading system or methodology is not necessarily indicative of future results. That's all I got for you, other than if you can't take that, take it easy.